Okay, we are live and the participants are coming in. Hello, everybody. Welcome to the Founder Institute event tonight with Patrick and Valerie and guest starring Sunil Sharma with his whiskey. Looks like he's the 007 of startups.
Well, Patrick Lore looks like the 007. Like, look at his place. Get a whiskey. I'm on East Coast time, so it's okay to drink right now. It's 9.
Okay, great. Okay, while people start coming in, let's Sunil and I riff a little bit. Sunil, you've heard this pitch a long time. What is Founder Institute, first of all?
Yeah, I mean, it's the world's biggest platform to launch startups. I think the total number of startups now that Founder Institute has launched, and literally launched them, right? Like, unlike programs where companies are quite mature and they come in for some help and then they move on. Like most of the companies in Founder Institute just like launch, and it's 5,000 around the world. And about 6 years ago, we started it in Canada, here in Toronto, in Montreal as well, and it's been running a little bit in the West. And just in the chapter that I run here, it's in Toronto, it's been 300 companies. So we have 300
amazing.
alumni companies, and a few of them are, getting into some good traction, and not more than a few, actually. I would say 30, 40 are very viable and on, trending towards big things one day.
Great stuff. Great stuff. All right, Todd Embley's in the house. That's great. I'm glad to see he made it into the link. Todd is the main director of the Founders Institute here in Western Canada, and he's based up in Vernon. Todd, why don't you say hello? Usually you ask me to say hello. Now I'm asking you, say hello and introduce yourself to all the audience out there.
Yeah, this is a nice role reversal. Can everybody hear me?
Yeah, beautifully.
Okay, well, it's good to see everybody. I wouldn't say I'm the main director. I am a director, along with you, Casey, and our friends, Kaylin Shah and Chad Ford out of Calgary. And yeah, I think it's a funny story how I got involved in this, because I had returned back to Canada. Of course, I was in China, and we launched China Accelerator with SOS Ventures, and now it's SOSV, the Accelerator VC. And then I had gone to San Francisco for a time. Then there was this election in 2017 and 16. So then I came back to Canada, and then I get back here, and I'm being drawn into this social atmosphere of trying to bring the Collision Conference up to Canada. And of course, Sunil is heavily behind and pushing all of it. And then he says, I get an email that says, hey, everybody at Founder Institute, please meet Todd. I think he'd make a great director. And now we have our team. And so let's do this. So, bypassing a lot of the, how do you do's and meet everybody. It was just a straight in, like, let's do this. And it's been great. And I mean, it's gone so well, and we've gelled and we've grown and we've built and been very successful. So it's been amazing.
And so right now we're in the middle of the cohort for Founders Institute, which is very exciting. And we're going to do a graduation at the end of January, but we're going to do the next cohort in spring. Can you talk a little bit about how to apply for that? What is it all about?
Yeah, basically you go to fi.co and you can get a lot of your information there. You can apply there. And if you're interested, I think there's a $50 kind of application fee. You get to do what is termed as an entrepreneurial aptitude test, something that FI has been reworking and building and reworking and drafting and iterating and so on for about 11 years now. And I know they've just come out with a new one as well. They've drastically reduced the time, but there's a lot of data behind kind of how and why and method to the madness of why they do it. And then and we're going to be kicking off March 3rd. Will be the fourth program that fourth or fifth program I'll be involved with. We did run one in Calgary as well, but now that we're all digital, now that we're all doing this from home, so of course we're doing this for all of Western Canada. And I think there's a great thing in there, which makes me really, really happy, is that now we can take great programming, but we're not location constrained. We can go to Whitehorse and Nunavut and we can take this into Estevan and Saskatchewan, or we can take this up to Whitehorse. We can kind of do this anywhere and involve everybody from across the nation, not just the startups, but also the resources, corporate partners, and the great mentors who live all over Western Canada. Everybody can now be involved and be a part of this. So we're really excited. We're trying to be as widespread as possible. So anybody here, if you're interested in applying, if you're interested in mentoring, if you're interested in being part of this, and you're from anywhere in Western Canada, please get in touch.
That's fantastic. Okay, and we're going to do an Air Meet networking event after this conversation with Patrick and Valerie. So if you want to know more from me, Todd, or Sunil, we'll be there. Now, Sunil, I want to talk to you quickly about your involvement in Founder. You do Founders Institute, you do Techstars Toronto, and you're the co-host of the Collision Conference, the biggest tech conference in North America. Talk a little bit about the mentoring and the network that comes along with joining a program like Founders Institute.
Sure. Yeah, it's they're actually all related in a madcap way. I kind of justify all of this. These are not all my my sources of like income or employment. Like Techstars is my one and only actual job, but it all sort of fits. Founder Institute's a pre-accelerator. Techstars is an accelerator. You can argue that Founder Institute produces potential deal flow for investors, whether it's an accelerator like a Techstars or Y Combinator, Acceleprise. It can some of the founders end up in places like EF, Entrepreneur First, or I think I've heard Antler is arriving in Canada soon, or other great programs. It validates entrepreneurs. It really produces pitch-ready companies that have done a lot of hard work in the course of 3-4 months, more work than they would have done probably in a year or 2 years on their own. I really do think that. And so it's a bit of a funnel in a way, right, to investors like myself. And I don't have any special rights to the companies that are in Founder Institute. I have to pay attention and get to know the entrepreneurs and kind of compete for them if they're interested in joining a program or taking some money from early stage investors. But I have good information, and if I'm doing my job right, I can pay attention to the founders that have a lot of high potential. And so in the most recent Techstars Toronto class, 2 of the 10 companies came from the very Founder Institute that I've been running in Toronto. So I've been doing it for 6 years. It's a voluntary thing. Like I don't make any money or anything, but about 300 companies are now the alumni from Founder Institute in my area of Toronto and Waterloo. And there's been some very strong ones. And if they end up in Techstars after, and we put some investment dollars, Techstars has, standard terms, $120,000 investment, take a little bit of common shares. And then it's another kind of intense experience for the companies to grow and do a lot in 3 months. Then, sometimes they end up in the portfolio of people like Patrick Laura from Panache, and they have. And so, and we're sort of a source of deal flow for follow-on investors. And at the high level, where you and I spend most of our time together is at the Collision Conference and the Web Summit, which just happened last week, and the Rise Conference in Asia, which you co-host. And what is that? That's just a huge gathering of entrepreneurs, innovation, startups, investors. It's fun. It's inspirational, and a lot of these founders end up going there too. And what the coolest thing about all these 3 things are they're very, very global, very international. And I like that.
Great. Okay, that's enough of the information. Like I said before, I put in a link in the chat here at the Air Meet. We'll do that afterwards. But let's get down to the main event, what everybody's here for, fundraising in 2021. So I'm going to introduce my 2 esteemed guests. I'm very happy to have them. Patrick Laura, the guy with that you think he's with a virtual background, but it's not. It's his office. It's amazing. He has a giant sign I see that says hustle, and come on, that's just so classic. So Patrick is the managing partner of Panache Ventures, Canada's most active early stage VC fund. And of course, you may know if you're a little bit older that Patrick was the co-founder of iStock Photo. Remember, that is an amazing company. Lots of Canadian companies in the photo business. It's quite interesting. And he is calling in from Calgary, where I saw him in person this summer for socially distanced coffee. Patrick, how are you doing?
Fantastic. How about you?
I'm great. Thanks for being here. Really appreciate it. And my other panelist is Valerie Song, the CEO of Ava, a startup making smart indoor gardens to help people grow food at home. She has raised $180,000 in crowdfunding and $3 million in actual funding and 15 different awards around the world. She's representing Vancouver, and she's also a mentor here at Founders Institute, Western Canada. Valerie, how are you doing?
I'm doing well. Thank you.
Great. I love your background, so everybody knows exactly what's going on from your side. So let's get into it. I've invited a VC and a startup into this conversation to talk about fundraising, so the audience can hear from both sides. What is Panache looking at, and then what is Ava looking at in terms of funding? So just recently, the venture capital investment in Canada took a major dip in the third quarter of this year. Of course, according to the Canadian Venture Capital and Private Equity Association. We can all guess why it dropped a lot, but another platform called Hockey Stick, which I'm sure a lot of you know, that does track a lot of the deals happening in Canada, also said that the Greater Toronto Area and British Columbia are seeing more robust venture capital deal activity. Patrick, what is the reality between these two? How is Canada doing in 2020, and how's Panache doing in this year?
Yeah, Panache is doing fantastic, Casey. I think that both those things are true. What we're seeing is a K-shaped recovery, and so you're seeing a K-shaped. Yeah, you're basically seeing at the top of the market, things are as frothy as ever. Like where we have companies in our portfolio that are getting valuations that are probably 2-3 years ahead of where they should be.
Oh,
right.
Great.
Yeah, and it's absolutely insane. Like we love all of our companies, but when we look at that you've got something frothy happening on your hands when we're shooting at the valuations that we're shooting for. So just so a couple of indicators. 2 companies in our portfolio hit over $100 million US valuations just in this quarter. Right? And that gives you a quick indication of what's happening out there. On the other end of things, yeah, I mean, it is tough. I think that we're finding companies that are finding it tough to raise $500,000, right? But in general, I think that if you're in a sector that's grown through COVID, you're going to see competitive rounds, and VCs have a lot of money. So one indicator that we look at is capital sitting on the sidelines and capital inject. And the second indicator is capital injected by governments into the world economy. So that first number is $1.7 trillion of private equity just sitting on the sidelines, just dry powder. And then world governments have pumped about $17 trillion worth of economic subsidies into economies worldwide. And that just goes to show you that at the top of the scale, there's just lots of money. But I think we have to be somewhat empathetic to the businesses that are going through a lot of pain. And so, the restaurants are part of them, Main Street's a part of it. But take a look at how Shopify stock is doing versus how Main Street is doing. I think that tells you the story of the K-shaped recovery.
That's incredible. Valerie, how are you looking at the market? You're going to be raising a new round very soon. Are you starting to get any kind of idea what the market is looking at right now for what you're doing?
Yeah, I guess I'll give a little bit of context as to
Yes.
our fundraising journey and what happened this year. So at the earlier part of this year, we were geared up to go to South by Southwest. We were chosen as one of the finalists to pitch on stage. And it was going to be kind of the launch pad to all our American conversations. We're very much looking forward to it. So 1 week before we were supposed to go and pitch on stage, they canceled the event. So it was quite devastating. It really thwarted a lot of our American plans. We already had our VC meetings lined up. So we weren't really sure what was going to happen. And a lot of conversations just fell flat, got ghosted, no response. So we kind of looked at that and we thought, hey, we have to take a pause and reevaluate what we're doing here, look at other options other than equity while things kind of settle itself down. So instead of raising a lot of external capital, we looked at what are free things that we could get today? What are the non-dilutive funding options? What can we do to drive more sales and ship quicker? We evaluated a lot of those things before even revisiting the equity side of things to make sure we had, looked at all the other options as well. So for 2021, I think this has been a really great record year for non-dilutive capital. I think we've probably gotten close to $1 million of non-dilutive funding across the last 12 months or so. So it's really incredible, like what Canada is doing and the Canadian government has provided for a lot of these innovative companies in our stage. So first of all, we tapped into that. And then we focused on driving a lot of our baseline metrics, growing our customer base, really delivering value to our core customers. What really worked in our favor as well is that I mentioned a little bit earlier while we were in the green room, 1 in 5 people are actually pandemic gardening for the first time ever. So it's a huge number of new gardeners that might be growing and failing, but they want that new hobby at home, but also having some nature indoors since they're spending so much time. And some of our competitors have grown threefold in the quarters versus year prior. So it's a really interesting time for our category. So I think a lot of that in the industry itself, the category, as well as government support, has really put us in a good position for a stronger fundraise next year. So I think there's a lot of silver linings as to what we originally thought was a disaster has really turned into, hey, how can we take time, get some free funding, work on our metrics, and grow to be an even stronger company for 2021.
That is such a great story, Valerie. I just Patrick and Valerie, you guys are already, that's it. We can just close up tonight. Everybody's it's such a great start to the event. So Valerie, I want to talk a little bit more about what you just said, because I think it's very interesting. I hear a lot about these government subsidies. Maybe you can talk a little bit more about, $1 million in non-dilutive capital is pretty amazing. I don't think a lot of other countries have that. And also you started in crowdfunding as well. So let's start a little bit of context into Ava, and then I want Patrick to kind of comment on it as well. Is this the way that startups should be funding in Canada? Crowdfunding mixed with some government subsidies and then some VC capital. Valerie.
Sure. So as far as our crowdfunding journey, when we originally started, and as you can tell, we have a physical product. It's not necessarily a cheap product per se. It's not, $99 or under. Our price point is set at $3.99. So when it comes to just knowing how much it'll cost to produce, the tooling costs, the inventory carrying costs, we knew that it would be a significant venture to take on, and that we would need a certain amount of capital in order to pay for engineering time, the inventory costs, and everything like that. So what we wanted to do very early on before we raised any external capital was to try to get some semblance of product market fit and understand more of what our customers are looking for. So crowdfunding, and we launched our Indiegogo, was our first indicator at, hey, are people looking for a product like this? Do we have a winning concept? What are people really looking for when it comes to indoor gardening? So in an essence, it was kind of like a customer discovery process for us, and we wanted to build our product with customers in mind. So what usually looks like it's an overnight success takes, months of prep. I think for the average campaign, a successful one, it takes 3 to 6 months of prep before you even launch the campaign. Wow. And yeah, it's quite the process. And now there are new processes where you have to add a pre-launch phase to test how well your ads are converting, what your return on ad spend is, your customer acquisition costs, your click-through rate. So it's a science, it's complex, and oftentimes it takes more money than people think. But it's a really great way to meet your customers, to really understand the psychology and philosophy behind, how to build products and what people are looking for in a product. So fast forward to today, during the start of COVID, we saw some of the largest crowdfunding campaigns. I think there was a really big scare of, oh, should I scale back my advertising spend? But as a result, the return on your ad spend was so high that we saw, $2 and $6 million campaigns back to back for our industry in gardening specifically. Amazing. You may have seen that, like Terra Planter, that Inside Out planter did really well. So I think it's a very interesting time for crowdfunding. I'm not sure how long it will last, but so far from the metrics, it seems like it's up from last year.
I spent a lot of money on Kickstarter this pandemic because I kept selling stuff, and I'm like, yeah, I want to support that guy. And then I found out, whoa, my credit card got charged for a lot of money because I have so many plans. So I think a lot of people are looking at that, even from the consumer side, right?
Absolutely. Yeah. And a lot of people just, if they're at home, they aren't necessarily going into shop retail. Online channels are a really good way to get visibility. Although I think now there's a little bit more competition versus the start of COVID, but it's still pretty good. And e-commerce has definitely blossomed. So yeah, very exciting time.
And then what about the government subsidies for like ag tech and things like that? Were they easy to get in BC, or are they better like say in Alberta or some other province?
I would say in general, Ontario probably has the most. I've been seeing a lot of manufacturing related grants, especially if you're in Southern Ontario. There's also ag related grants. There's also I think it's called ODE or OCE, something like that, where they have matching grants for investor dollars put in. So I think in general, they seem to have the most. But BC certainly has a lot of great incentives, such as the eligible business corporation, the tax credits for BC-based investors, where they can get 30% back. There are other programs like SHRED, which are federal, SHRED financing as well for those who might need it before the end of the year and be able to pay interest over that just to have access to the capital a little earlier. So there are a lot of creative ways that you can not only get the grant itself, but leverage those for other loans, short-term loans to keep your cash flow going. So I think definitely been very creative on it. BC has been really good to us. The federal government has been really good to us. So primarily, I think it's a lot of IRAP and SHRED support.
Okay. Patrick, same question to you. Are you seeing a lot of companies come to you that have leveraged crowdfunding and government grants? And what do you think of this kind of process for funding towards Canadian startups? Because this is kind of a new thing to me. I've never seen a government so supportive in this area. At the same time, I think VCs might have a more expensive price tag to pay on some of these companies. But let me know your experience.
Yeah, I think overall, getting some of this funding is good, and to me, it's all about signal. And so I think that one of the myths that we have to bust is that investors are actually smart. Like most investors aren't, but what they are is they're trying to collect signals, and so they're basically looking at the data. So if you went and you went through all the paperwork and you figured out how to get a government grant. And there are some grants that are fairly easy, like IRAP or SHRED is fairly easy. IRAP's a little bit harder, right? Some of these other programs that Valerie's talking about might take a couple of weeks to fill out a grant application, right? So I think Valerie's making it easier than it sounds. And to me, if we understand how hard it is to get one of these grants, and Valerie's done it, that's a very positive signal. Right? And then I think there's a couple of other positive indicators in there as well, which are things like, hey, if she was able to get a few $100,000 off a crowdfunding campaign, that's fantastic, right? Because that's not easy either. You're collecting money like $20 at a time, and that's pretty hard. And so it basically gives a signal. Now, what kind of signal is that? I think mostly in the early stage, it's good. We see, the main criticism of government grant is that you're 5 years into it, you have minimal customer and investor revenues, and you're still living off the government. That's a horrible signal. That's like living in your mom's basement for a little too long, right? But yeah, I think in general, we're just looking for data. We're looking to see that you have an interesting message to both investors and customers. We want to see that you're getting attention, that all those impressions that you're paying for are actually paying off, right? So yeah, we definitely look at that data. I think that right now the number one thing that we're looking for is how effective are entrepreneurs at networking in this new age, right? So Valerie talked about, hey, we lost South by Southwest, we lost our typical kind of way of bumping into investors. How do you do it now? And I think there is definitely a way to do it. I think at the beginning of this in March and April, I think the world was kind of fearful that, man, VCs will never write multi-million-dollar checks in an environment where they don't meet people live. Yeah. And the last few months have shown like they'll write $20 million checks, just by having met you over Zoom.
Amazing. That's a big promising thing for sure. And then we have these big IPOs about to happen. Well, DoorDash saw a lot of more business this time, but Airbnb didn't necessarily, and they're still being able to find new ways for revenue. So it's very exciting there. Also, I'd just like to say to the audience that's listening, we are taking questions. So if you want to just drop them in the chat, I'll take a look at them toward the end. But if there's anything that picks your mind of something that one of the speakers said, please drop it in there. I'd love to hear from you. Okay, so another question I want to know, because since this is about Western Canada, I'm based in Vancouver, and Todd's up in Vernon. What I hear, like, it's hard to find seed funding in Vancouver, so that's why people like Valerie found their own way to do it by crowdfunding and government grants. But what's it like in the rest of Western Canada? Like, let's talk about Alberta as a whole province. It's the fourth biggest, I think, funding capital in Canada. And then how about Saskatchewan, Manitoba, and how about the territories? Patrick, you said you knew a little bit about what's going on out there. I'd like to hear a bit more for us, West Coasters that don't know what's happening in the rest of Canada there.
Yeah, Calgary is exactly where it's at, man. You guys ought to come over. Yeah, it's been pretty good. I think Calgary has long been a victim of having a really great, industrial sector, right? So really great construction industry, really great oil and gas and energy industry, really great forestry, and that's suffered lately. And so, what have we done to adjust for it? I don't think we've adjusted fast enough. But at the same time, Calgarians, I think, and Albertans in general, they're very industrious. And I'll give you an example here. I think that if you compare Calgary to Toronto, if you look at the typical kind of rich person, what a rich person does in Toronto, how they gained their wealth in Toronto, this is pretty stereotypical, Sunil, so you can debate me on this. But I would say that because Toronto is just has been established for much longer, you might see people with, let's say, an average of $10 million net worth might be wealth managers. It's third generation wealth, right? Whereas in Alberta, you see somebody with $10 million here, they probably earned it themselves. And that kind of attitude of entrepreneurship is pervasive in our economy. So we have a lot of people here that made their own wealth, and that just takes a different kind of DNA. Overall, I think what we're seeing here is people are finally seeing the light, and there's a lot of new money going towards tech. And so Alberta government has been re-upping, and basically they put a new $175 million into Alberta Enterprise Corporation. Wow. And that's gone into fund of funds. And what that means is they're funding VCs like us, and they're basically asking us to put that money to work in Alberta. And that's exactly what we're doing. They're one of our investors. And Manitoba and Saskatchewan are looking at the same things. But beyond that, I think there's just a lot of good people like you, like Todd, like Sunil, just working their butts off in the ecosystem. A lot of it's volunteer time, coming up with great community initiatives to help startups. Same thing happening here in Calgary and Edmonton. So I'm very, very optimistic about what's going on, and we're active. We're writing checks. Yeah. Our thesis is to get 100 companies into the Panache fund. We're currently at 80 checks, so we have another 20 to go. And just to give you an idea of what's been happening, we are committed to investing 90% of our fund in Canada, right? And we're hoping to do it across the board. We're hoping to hit all measures of equality and any other measure that you want to look at. So we're looking at slicing and dicing by region, right? So we want to invest. We have an investment in Yukon. We have an investment in St. John, right? So coast to coast.
Can you tell me, what is the startup in Yukon? What are they doing?
Yukon is a company called Proof, and actually, yeah, Sunil knows them. They're a Techstars company, so they're truly pan-Canadian.
Wow, right? It's all happening right here.
Yeah, it's a GovTech company, and let me put in a plug for the Yukon government here. These guys probably wouldn't have been able to get their start were it not for great people like Sunil at Techstars, but also the great people in government at Yukon. So they're a GovTech company. Okay. And so just think about any government where there's 40,000 people in that territory. You could just go across the street, knock on the door, and just talk to the deputy premier. And that's how they made a lot of their connections, right? Wow. And that doesn't happen in Ontario, right? So there is an advantage to being in a smaller territory.
That's so interesting.
I just want to add one thing. I mean, Patrick, yeah. This is a speaking point for you to use anytime you want, but you're also investing in West African companies without leaving Canada. So we had a few great companies from Lagos that we brought into Techstars. Panache invested in one called Corapay, and the company is entirely focused on the growth of Africa in fintech, in payments. And yet the company flipped into a Canadian incorporation. So the company's actually headquartered here. The founders have gotten their permanent residency immigration. It's something that they actually do plan to use, but they haven't lost sight of what they're focused on, which is a country, well, Nigeria to start with, that is growing so fast, is so dynamic. The population of Nigeria will exceed the US population by the end of the century. And really, there's 1.3 billion people in Africa, average age 19 years old, incredibly savvy with mobile and fintech. And here we are investing in Canada in a company which focuses on that market. So that's a nice extension of the global thesis. And I love how Panache took advantage.
We need to get those guys on a talk too, because I think that's quite a success story. So it's a global success story and a Canadian success story.
For sure. And Casey, just one other thing to add on top of that, just make it slightly more granular. The reason why a Canadian incorporation is so important is because a lot of the investors will have tax implications for investing outside the country, right? So that we are able to invest in a Canadian entity that's doing business in Africa is super, super important. That's not to be underestimated.
Yeah. I have two more things I want to ask you, Patrick. First is a statement. When I visited you in Calgary, I was also impressed that all the tech stuff was there. So there were like Lime scooters, everything that we don't have in Vancouver was there in Calgary. So you guys are a lot more, feels like more progressive in that space. But I think a lot of people want to know on the call here, what kind of check sizes are you writing for startups?
Yeah, so we allocate up to $1 million per company. We're $500,000, up to $500,000 on the first check, $500,000 on the follow-on. We're looking at valuations kind of in the pre-seed stage, kind of sub 5 million, and then at the seed stage, sub $10 million. So what that tells you is that we're looking for about 5% ownership for every check that we write.
Wow, great, fantastic. All right, Valerie, now I'm going to ask you, if you are not here in Vancouver, where else in Canada would you go to look to raise funds or even base your startup? And you can't say Toronto. Just kidding. You can say Toronto.
Oh no, I was just going to say Toronto.
I'm just messing with Sunil. You can choose Toronto.
I mean, it would probably be Toronto and then Calgary. Yeah.
The people on the call right now. And Vernon's a good place too.
Yeah. I mean, in general, I think there's just so much activity, and Vancouver and Toronto are really big hubs for doing business with other areas. So I think just because of exposure and how much I know about each of the places, I'd probably pick those two.
And is that also for fundraising? Are you going to do you think you'll go to the States when it opens up to do some fundraising?
I think potentially, but I really do think that COVID has changed the way that people fundraise and are receptive to taking on conversations. So the number of new tools that I've seen popping up that actually connect you with investors and vet those connectors for you for free is amazing. So One Pager, DocSend, Hockey Stick, Angel, NFX, they all have matching programs. And the response rate I'm getting versus what my cold outreach was before has significantly improved. I've been scheduling a lot of conversations, from cold outreaches on LinkedIn to like the C-suite, employees at some of the largest companies in the world. So I think COVID has made it easier for us to connect online and made it more approachable to have, a 20-minute conversation with somebody who might be willing to help out or hear your story.
And Casey, let me add to that. From our perspective, like, we used to play in a fairly small pond where there weren't many other players involved, right? So imagine coming out of COVID, where all of a sudden we're writing these $500,000 checks, and these rounds end up getting oversubscribed, right? So not only are they oversubscribed, like, we're looking around going like, wait a second, there's so much money in the system. Where is it coming from? And then we take a look at the cap tables, and we're seeing big funds, big US funds, like $500 million, $700 million funds coming downstream and writing pre-seed checks It's absolutely an insane environment out there. It just goes to tell you that there is a lot of money, and big VCs are going out shopping, and so you would typically ask the questions like, okay, you're a $700 million fund. What size check do you write? That's exactly the right question. And they would say, oh, it's between 5 and 10, and we're in the A round plus, blah, blah, blah. But then you all of a sudden see these guys writing these little checks in areas where they don't belong. It's just a sure sign that we're in a bubble. So if you're raising, get out there and work your butts off, make it happen.
Nice. That's great. That's great information. Okay. I want to find some bad stuff. I don't know. This is sounding too good. It's like I want to move to Canada too. If I wasn't in Canada, enjoying this fantastic ecosystem here. I don't know what we can discuss about bad stuff. Okay, so I guess in BC, I see ag tech, clean tech. These things are not very popular so much in Asia, but they seem to be popular here and doing well. And so, Valerie, I seem like you're doing well in this space. And Patrick, what other verticals do you think have because I think some people are on this call are budding entrepreneurs and are starting their own business and want to think about what they're doing. What kind of industry verticals do you think are going to be doing well in Western Canada, taking advantage of the knowledge and the network that are here? Let's start with Patrick first, and then I'll ask Valerie about that.
Yeah, the great stuff is exactly where we expect it to be. We're just seeing an acceleration. So anything having to do with digital transformation is absolutely just on fire. So Satya Nadella, CEO of Microsoft, said that he saw 2 years of digital transformation in 2 months. So anything B2B SaaS is just taking off like crazy. In digital health, that's going really well. FinTech's going really well. E-commerce is going really well. So I think the kind of sectors that have grown through COVID are just on fire. They're seeing increased valuations, increased multiples, increased business all across the board. Right? So that's the first thing. I think what you're seeing also on top is that any company having to do with building that digital infrastructure is absolutely incredible. So IT service firms, anything having to do with bringing AI talent, developer talent on board, they've just been swamped. So companies in that category are doing incredible. And so I think as evidence, if you're a dev and you're looking for a job, there's probably 6 jobs for every 1 developer available out there. So that's the first thing that we see. What's not doing so well, we have some sectors that we think are still in the penalty box for now. And so anything having to do with tourism has been really tough. They've had to retune. Anything having to do with kind of temporary housing. So for instance, Airbnb related businesses have been doing tough, although Airbnb itself is doing well. What we're seeing those companies do is really start to tune towards more longer term rentals. Right? And then anything having to do with government procurement has been really, really tough as well. You're seeing businesses and government, and I would say even most commercial real estate really stretching out the sales cycle, and those have been tough. But there's always pockets of opportunity. So pockets of opportunity, commercial warehousing, right, for last mile shipping logistics, absolutely on fire, right? Yeah. Office space, absolutely dead.
Valerie, what is the ag tech scene like? Do you keep track of the other startups that are coming out in Canada? They're in your vertical. Is it booming? Are you the major player? What do you see in that area?
Yeah, I was just actually talking to somebody else about this, and I think there are certain areas, like many other industries, that are really seeing rapid growth, some that are not. And I think the ones that we've been seeing that have been really interesting, I guess it kind of spans into life sciences as well. There are a lot of companies in BC that are talking about going global and maybe taking it to IPO, getting some really significant people on the board to help with the IPO process. And a lot of that has to do with the life sciences, maybe some things to do with COVID and the potential application to solve larger issues. Another area that I think has been really been highlighted during this COVID-19 process is a lot of sustainable technologies. We've seen a lot of disasters around the world, a lot of the forest fires in the US as well. And I think it's just really spawned some new development in and focus on sustainability. So we just saw TELUS Pollinator Fund. It just opened, just got announced a couple weeks ago. They're really trying to invest in a lot of sustainable elements, new business models and ways of doing things that take into account the environment that we live in. I think COVID-19 has just really shed a light on how, if you're not taking care of the earth and yourself, how things could really happen in the wrong ways, and bringing awareness to, you know, investing in the future of our world and our health and our next generation. So yeah, on top of all the things that Patrick was kind of sharing, I think sustainable tech will be very, very interesting, and things that really change the way that supply chain works, reducing waste and really improving accessibility.
There's a question in the thing. Is food tech considered life science?
It depends on what aspect, I think. So for food tech and life sciences, where they could overlap is where you have alternative meat proteins, such as you know, Beyond Meat and things like that, or maybe seafood substitutes. So that's kind of where I think there's a little bit of, you know, lab involved.
Okay, I'm going to ask Sunil this question, but don't take too long to answer it. I just want to know, like, just in comparison to what you just heard Patrick and Valerie talk about, just to contrast it, what are some of the verticals that you see a lot in applying at Techstars this year? Maybe just to kind of have a vibe for that.
Yeah, this next batch should be all TikTok and K-pop related. I think that's, you know, safe money, right? Gov tech. I mean, I think that's a boring industry. We saw that company Proof. The internationalization, like anything that, you know, we're basically trying to apply models that we've seen work in the US and North America into emerging markets. Africa is the most exciting one, I think. Digital transformation, digital health for sure. Travel tech might be kind of something to watch carefully now. It's going to come back. If you look at the airline stocks, Air Canada's kind of has come back like 60% of its market cap is recovered, and I think travel will come back. The vaccines is you know, weeks away, so that could be interesting. Mental health, we had a fantastic company.
Okay, so it sounds like the same things. So there's not much. These are the main points. It's good. A question from Mark for Patrick: would Panache invest in a company that may be viewed as a competitor to a current portfolio company? Good question.
So let me re-ask that question. Would we invest in a company that is a competitor? Likely not. But we would take a look at it just to determine whether it actually is a competitor. Right. So we do invest in a lot of spaces, in a lot of companies that are kind of semi-related in the same vertical.
Okay, great. That's interesting. And then what's the best way to pitch you? Somebody asked before. They wanted your email address, but I won't give it to them, not for less than, you know, lots of money. But what's the best way to reach out to Panache?
Yeah, I'm not sure it's worth all that much, but we have a couple of ways. So reach out to me on LinkedIn. Reach out to us on the site. We actually have a way for people to submit their decks and a little bit of information on our site. But I think the absolute best thing to do, so I'll give you the secret there. Both of those are suckers bets, right? Very few of those get through. And maybe
Insider scoop, I love it.
Yeah, and Valerie could probably comment on this because she's kind of a pro at fundraising here. It's like, I don't know when the last time a cold email has ever worked for anyone. And the real key is this: is that those that have figured out fundraising and COVID have figured out that you've got to go to everyone that knows you even a little bit in your network, be it an advisor, be it an investor, be it your high school teacher, and just work their network. It's just like, Dr. Bob, you know me, like, who's in your network? And can you say that I'm a good person, that I'm not an axe murderer, and that I can be trusted with your money? And you need that warm intro more today than ever before, because we're not getting that in-person body language signal that you would normally get at a conference.
You know, I think that is one of the biggest reasons why Founder Institute and maybe other accelerators, Techstars, why they matter, right? Because we really have a set of standards and a network and our own credibility at stake. We wouldn't really try to recommend entrepreneurs to investors that that we didn't believe in. And so that's part of, I think that's why these are signals. And I think signals do matter. There's just an incredible number of startups there's just so many companies out there that it's baffling to try to track them all or pay attention to them all. It's impossible.
Yeah, Valerie, how about you? So yeah, cold call. Like you before you listed a whole bunch of great ways to reach out to VCs and investors. What have been the best? Has it been just a reach out from some of those platforms, or is it really a warm intro that always helps you the most?
My favorite thing has been kind of, I'm going to toot my own horn here because somebody else is tooting my horn, but working with an incredible advisor who sometimes, if I'm pitching in a group or just talking to multiple investors at a time, they would be able to seed the conversation and say great things about us and why she is an advisor of our company. So I think that is a fantastic way. Like, don't just, go for maybe just a connection that you might know a lot about. If you have an advisor that's really well connected and they can say good things about you instead of you saying good things about yourself, then that's always a great bonus because it's not you just talking about yourself. So I think that has been super effective. And another way that we found some pretty good success is through those matching programs that I mentioned before, like through DocSend or NFX. In the case that where we can't just find a single person who knows that person, and we can't find the portfolio founders that might be willing to make an introduction, that's kind of the last resort where there's still very credible people who run these organizations that are focused on connecting VCs and startups. So they are also a really good choice. I think finding the email and doing cold outreach is probably the last choice for us, but still at the end of the day, if there's no way around it, it could be an option. But I think warm intros and having, those critical connectors in your own network are really, really important.
That's a good point you bring up, the advisor thing. I've seen that to work very well for people, either mentor or advisor. How do you recommend, people with a limited network to start to reach out properly to an advisor, getting somebody on board as an advisor or a mentor? I think that's a question I get a lot actually here.
Yeah, so I think the first step is to look at your industry and your company and to look at where your biggest gaps are that you might need support on. And then the second thing I would do is I would try to look up on LinkedIn or on Crunchbase or Angel some people who are relevant in that area that might have those things that you need. And the third thing that I usually do is I'll either try to meet them at events or panels where I just listen to them talk and try to connect with them after, or I try to get a warm introduction to those people. But if you have really good values alignment and you structure that introduction very strategically where you're asking real questions and not just, can I take you out for coffee? I think it makes a really big difference. So that has gone a long way, especially during the virtual times where you make it more personal and actually make the effort to try to go online and meet them instead of just taking the shortcut and just sending a quick email or submitting through a form. So yeah, just try to go out of your way to research who they are, personalize that intro, try to get that warm introduction if you can, and if not, just try to meet them at online events. So yeah, that's been my approach so far.
Great. Yeah, that's great advice. I think that's a good point. And I have another question for you. You've done a lot of this by yourself, and we're kind of pitching a Founder Institute Techstars thing. You didn't join an accelerator, not to put you on the spot, and it's okay. I mean, it's for some people, not for some people. But would you consider joining like an ag tech specific accelerator? Do you think you need it? Do you think you don't need it? Do you think that you could do with the network that is provided by some of these other accelerators? And talk a little bit about your thought to just because you seem like a very outgoing person. I'm sure you're very personable in real life. So it's very easy for you to meet people and talk to people. But I mean, some people are not like that. And so what do you think are the pros and cons of an accelerator, joining an accelerator to help, build that network and do things that you can't do, that you're not good at doing?
Yeah, for sure. I mean, we've certainly applied to all sorts of different accelerator programs. We've been through a few that are maybe not as well known, but for those of you who know, in Vancouver, the next big thing, which is now League of Innovators from Hootsuite, and some other programs as well, like A4 0 to 1. We've participated in a few. I think the great benefit as well is if you don't have those connections and you really need to build your network, what a fantastic place to meet people who already have a lot of great connections to advisors, mentors, investors, people who could really help out in your business. So for the network, I think that's super helpful. And then another really good thing it adds is credibility, as well as training to you as a founder, especially for those people who, like myself, may be a first-time founder that needs support on some strategic areas that would take a long time for you to learn outside of the program. And then finally, I think the peer network is also really great. There are a lot of Slack channels that I'm now a part of, and they share a lot of really great information, discounts, ways to, get an introduction to, or maybe offering to make that introduction. So a lot of really great benefits for joining a program.
Yeah.
But Casey, if I could add some
Please.
to that, I think that one of the things that happens in an accelerator program is that you get a lot of feedback. And one of the things that I find in entrepreneurs when they're not used to getting feedback is they get really, really defensive. And so what I think the good people like Todd and Sunil, what they do is they basically put a whole bunch of advisors and EIRs and investors in front of young entrepreneurs, and they basically just get hammered. It's basically like, you're not doing it right. Your pitch isn't good enough. You're not telling me why you're unique. Why should I give you $1 million? Why should I spend an hour of my time with you? And over time, after you get put in the boxing ring that many times, you end up speaking less defensively, and you end up telling a better story. And that's what gets people's attention, right? So it's just another form, like going through 6 months of school where you're just getting beat up every single day, and you're building up a little bit of that fight in you. So next time when you're in front of a pitch panel, and some guy goes and says, well, I've seen 100 businesses like you, what makes you unique? You don't get frozen, right? You're able to answer that eloquently. And you should be able to pull out a few checks out of any pitch like that if you can stand up to questioning like that.
Yeah, great. Todd, I can't seem to get the Q&A button to work. Do you, by any chance, see it working? Can you read out some of the questions then maybe?
Yeah, I've got it in there. So one off the top is, do you think commercial real estate investors are looking for a way out?
Nope. No, I think most now. Let's just think about what commercial real estate who your typical commercial real estate investors are. They're big. They understand that commercial real estate is risky even at the best of times. And so I think they're in it for the long haul. Most of the commercial real estate investors I talk to are good, right? Most aren't selling right now. Now, it depends who you're talking about. If you're talking about a individual investor that owns the one commercial building on the street corner, yeah, they might be in a little bit of pain. But if you're talking vast majority of the big REITs, they're holding fine, they're holding steady. I heard a stat that they were getting something like 95% of their rents paid. So the default rate is super low even in this environment.
Got it. Here's another one. I want about 10,000 USD for my business. Tried Kickstarter, but no result. Any ideas?
Depends what the business is.
Yeah. I'm typing an answer that just says friends and family is the first place you should go.
Yeah, for sure.
That's a lot of what we have here. Some thanks for sharing, Valerie. Good points, Pat. But no other questions.
Todd, maybe jump into that a little bit, because I think that we may have been talking at a level which kind of, for somebody raising $5 grand, 10 grand, 20 grand is somewhat out of reach. We've been talking about, hey, listen, if you got a business with a business plan, you've got the right team, and you're pitching for anywhere between $500,000 to $2.5 million, that's where we play. But we should probably go around and talk about, well, geez, how do you raise 10 grand? And I think the way you raise 10 grand is on personal character, right? Mm-hmm. Is that you just, I don't think anyone's looking at a business plan when you're raising 10 grand. It's basically like, it is truly from your grandmother. It is truly from your uncle. You had better have been a good kid like 10 years ago, right? Otherwise you got no shot at it.
Yeah.
But yeah, go to your former bosses, go to your friends, but it's a really tough decision because, you had better come through if you're knocking on your friends and family's door for investment money.
Yeah. How about Valerie? Just bounce out to Valerie. Like, how did you start? Is it just you went right to crowdfunding, or did you ask your parents for some money, or like, how did that begin?
Well, our very first check was actually from UBC. So I would say for those of you who, went to university or maybe a really good high school, always ask your existing network for opportunities. The check that was written was non-dilutive. We were a pretty active member and we still give back to UBC today. So I think that's a really great place to start. We were able to take that money, extend it to leverage other non-dilutive funding. So before we even raised equity and given up, pieces of our company, we were able to do quite a bit and launch our crowdfunding campaign without having to raise any external money. So I would say try to make it stretch. I think Mohammed was the same person who asked about the product he wanted to make was a watch, and the prototype cost could be 110,000 USD. What my challenge to that would be, have you already gone out and done customer discovery, really proven out some of the early product market fit? Physical products are so expensive to build. And once you invest in tooling and molding, like that is a huge expense that you can't really reuse anywhere else. So before even launching and building that product, make sure you've talked to customers and really understood what they're looking for. We actually have some good resources that we're developing for other hardware founders to avoid the same mistakes we had in the early days. So happy to share that later on as well.
Yeah, and it's important to recognize that 10 grand isn't a lot of money. So the number one story that we hear from founders raising, let's say 10 to 50 grand of their own capital is basically selling services, right? So iStock Photo, we basically, our day jobs was selling websites. Like we were a web services firm, like boring old web services back in the year 2000. Right. And so we'd sell a $20,000 website that would give us an extra couple of grand to pump into iStock Photo. Right. It's as simple as that.
That's so good. That's a good story. That's what happened a lot in Hong Kong, I remember. But then a lot of people got snowed under with too much work like that. They didn't focus on the startup anymore. That was a problem. Oh, hey, Todd. Hey, Todd's daughter. Todd, is there any more questions in there? It looks like there's 15 questions in there, 17.
Yeah, well, you inspired everybody to go there to ask a lot of questions.
Let's do a couple more because we're running out of. This is coming to the end of the hour, so just choose a couple more. Awesome.
I mean, let's one of these. Is there still any interest in the cannabis sector in Canada?
Good question.
I'll answer with a non-answer, which is our investors have asked us not to invest in anything fun. So no sex, drugs, rock and roll. So essentially no alcohol, no cannabis,
and no K-pop.
Yeah, exactly.
Yeah, it's that's true. But what about psychedelics? I mean, it's still, I guess that would be even considered to be more fun, but because of what we're seeing in the grand scheme of legalization, like, you've got places like cryptocurrency where the walls continue to close. And as a share owner in BitMEX, I can tell you that's not fun. And then you've got places like psychedelics where we're seeing, it's getting broader and wider. So does it make a difference? Looking at maybe Sunil and Pat on these kind of things, are you looking at what happens, regulation wise in sectors, whether they're closing or opening, or what's happening to, affirm or confirm your decisions to invest in those sectors?
Yeah, we haven't gotten there yet. We would probably have to ask our board for an exception on that. But what we're seeing is that currently psychedelics are essentially illegal to own outside of the clinic. So you need a special clinical license to make it happen. And so we haven't seen a business plan that actually works. But yeah, I agree. I think that ultimately, if you do just a little bit of reading, you would know, and it sounds like you already have done this reading, is that psychedelics have been largely stigmatized through the 60s and 70s because there was this big fear campaign. And I think we're just working through it now. The laws are actually quite oppressive. And so it'd be nice as a next step to see the regulations start to be peeled back a little bit to allow for innovation in the space. And I think the early evidence on psychedelics is that it could have a massive positive effect on mental health.
Yeah.
And on your point about BitMEX, cryptocurrency has been an area that I think typical accelerators and early stage investors weren't really, supporting over the last several years, and now probably seeing it back with some regret, like Bitcoin is soaring and the valuation of exchanges is so high, and then you have the arrival of PayPal and Wealthsimple that have built, that have made enormous announcements, the regulatory body. So I think now you'll see more crypto and companies or innovation related to digital currency, digital assets, custody, start to really get attention, and there's going to be big exits, I think, in them as banks start to acquire.
There's another question here, I think that's interesting for more earlier stage. What's the best way to validate your startup idea with potential client base without putting a lot of money up, or using or investing a lot of money to do it?
I can take that quickly. So before we even built and drew out our concept ideas, we probably surveyed hundreds of people and just tried to explore what the pain point really was, and then define the solution after we knew what the pain point was and the willingness to pay and all these different things. So if you have limited time and money, I would suggest starting by validating your startup idea by actually just, approaching people and asking them questions until you get a really solid, script and kind of set of features that you could build on.
Nice. Okay. In a successful funding event, and I think this is a great question, Winston asked this. In a successful funding event, what is the time frame generally from first initial contact, first pitch, maybe first meeting to money in the bank?
Could happen in a week.
Wow.
Could take a year.
Yeah.
Right. So really hard to say. I think, Todd, what's interesting about a lot of these questions is that they're looking for a yes, no, A or B, et cetera, et cetera. And the reality is that there's a lot of emotion involved in here. And this kind of goes back to, I think, people kind of overestimating how smart investors are. Yes, there is a general algorithm, but investors, I think, are they use a lot. I would think that a lot of good investors use a lot of data, but it really is making a guess as to what the future looks like. So if you think about all of us in the room, all of us on this chat as being futurists, right? And our job as futurists is essentially to say this, is I'm going to invest $1 million into something, and I predict that this industry is going to be massive in 5 or 10 years. It's going to give us a 10x return, right? Valerie's job is essentially to say that I think that in 10 years, everybody is going to be growing this, and everybody's going to have $500 worth of AVA equipment in their homes growing this, and this, right? And it's going to become a multi-billion-dollar company, right? But this is what's going to happen in the world to make that happen, right? So not only does she have to predict what's going to happen with her own company, but what's going to happen with the overall macro economy, right? So you've got a lot of balls to juggle. And I think that overall, people are trying to read all the signals and trying to populate an algorithm and create an algorithm to basically figure out what is that billion-dollar company outcome. And everybody's going to have their own algorithm, because I guarantee you nobody has it right. People might get lucky and make the right guess. But yeah, nobody has a proprietary algorithm that actually works, right? So the way that I do it is this: I just look for a couple of things. Is that since we know that your business plan likely is not going to work, since we know that our guess or your guess for the future is likely going to be wrong, we're looking for resilience and flexibility in the entrepreneurs, number one, right? So we're looking for situations where they encountered something that could have tanked their business. And we're looking for that story that said, oh yeah, I did this, almost killed my business. We did this 180 and here's what happened. Here's how we survived to this day, right? And to me, that's one of the best signals that you can get from a early entrepreneur.
Hey, Val, early on, and of course, Sunil Peck can jump in on this too. before you really have a lot of data and metrics to point to prove valuation, how did you go about creating and coming up with your kind of valuation proposal and proposition to be able to defend the thesis of how much you were raising versus how much you were, willing to give up for that money?
Yeah, I feel like this is a much debated topic, and there's so many different ways to approach it. Like some people do DCF, some people do revenue multiples, some people do potential contract they might be having in the future. Some people are just basing it on existing revenue. So I think there's an element of customization based on your stage, your comfort level, the industry you're in. For us, when we started out, it was based on a revenue multiple for several letters of intent that we'd received from distributors and retailers. We also had some other things in there to back it up, such as some of the IP that we were developing and other things like that. But in general, I think it is quite difficult. If you follow the general guidelines, there are also kind of suggested levels of where your valuation should sit in a certain stage. It's not always going to be the best fit for everyone. So I would say just do a little bit of research on your competitors at the stage that you're raising, and maybe some similar industry verticals. And that could be a good benchmark for where you can start.
Yeah. Well, you were almost the Macintosh, right? I mean, you're, what you're producing now, and then, hopefully in 10, 15 years, I mean, Ava is all kinds of products all over the map for doing anything indoor home growing. So it had to be very difficult. How important was you understanding your costs, because you're a physical product, and everything that goes into actually building and delivering, being able to deploy from 500 customers to 5,000 to 50,000? How important was that to investors for you to understand well?
I think to a certain extent, like financial forecasting is very rarely accurate. So kind of what Pat was saying, like there's so many things that you will do your best to predict, but a lot of things are going to end up outside of your best guess. But there are certain things that we did to ensure that we had a general good understanding of our costs and how that would proceed to, maybe with economies of scale, would drop down. But certainly I think a lot of things evolve with time. It will change with the suppliers you meet and talk to. So the best thing we did was average, pessimistic, optimistic, and hope that it fell somewhere in between. I think it's a little bit of art and science for sure.
Okay, Todd, let's make this. Do you have one last question? We'll just wrap this up with one last ultimate cool question for both of them.
Ooh, that's a good question. What to come up with? I
mean, is there anything in the chat there, or I have a question, but I can end it with.
Why don't you roll? I'm scrolling through. I think we've covered a lot of this. Yeah.
Great. So I guess the most important thing is to end this off, Patrick. 2021 first quarter. What are you going to see? What are you looking at? What are you expecting? What's on your agenda? What is Panache looking at?
I think people are going to be wildly optimistic. I think that what's going to happen is
it's because of you. You made me wildly optimistic tonight.
Yeah. There's some good stuff going on. I mean, if we can get this COVID thing under control, governments are willing to spend. There's a lot of money sitting on the sidelines. I think there's a lot of the FUD that we were experiencing 9 months ago has essentially gone away. Like, we are okay with investing in people that we've never met in person. We're okay with putting millions of dollars at work because we know the economy isn't going to fall apart. Government isn't going to shut everything down. It's going to allow some commerce to happen. So I think that, things are going to continue to go well. I think that valuations for the right companies are going to continue to go up. And so it's super, super important that you just nail down everything and make sure everything is pitch perfect, right? So if you have the chance to pitch, to get on a webinar, make sure you show up perfectly. Make sure your Zoom background is just looking awesome, right? The number one mistake that I see in entrepreneurs when they have the ability to make an impression today is that they don't make an impression, right? So you're on a webinar, you're on a panel or something where you have a chance to have your camera on and to ask a question. Number one, you're too shy to ask a question. Number two, you didn't put on pants or a shirt, and so you're not turning on your camera, right?
That's Sunil's problem all the time.
Yeah. Get dressed up, fix up the background, and just like, imagine this, right? You're in a call with 20 other entrepreneurs, and 19 of them are too shy to turn on their cameras. You're the only one that the investor is going to see, right? So sometimes it's just so simple. And so, just keep in mind, the money is out there.
Great.
Get ready for the pitch. Have your pitch materials ready. Have yourself ready. Look good. Get ready to answer questions. Get ready to ask questions.
So basically, Valerie is like the exactly perfect, ready to go startup right here. She's got the great background. She's ready to go. She's got the cool headphones on. She's ready to go. So Valerie, 2021, first quarter, first half, what are you looking at?
Yeah, so really excited to see our sales grow and continue to grow. We're launching actually another crowdfunding campaign very soon, so excited for that. And hopefully we'll be able to announce some partnerships and new fundraising by then as well. So lots on the horizon for 2021.
Thank you so much, Valerie. Thank you so much, Patrick. You guys have been awesome. Patrick, where can the audience stalk you online? Is it LinkedIn, Twitter? What's the best way to kind of follow you?
Yeah, I don't check my Twitter very often, but when I do, there's not much happening there. So think of it like snail mail. I'll answer it every 3 months. But yeah, LinkedIn, I'm a much more regular checker of.
Check her off. And how about you, Valerie? Where is the best way to keep up to date with what you're working on?
LinkedIn as well. And I also have some free Medium blog posts out there for people who are looking for non-dilutive funding, not just for SaaS.
Great.
So
great.
you can check that out.
Okay. Thank you so much, you two. Todd, why don't you take it home? Just tell us again how to join the next cohort for Founders Institute.
Yeah, pretty simple. Go to fi.co. It will geolocate you to the closest program that is to wherever you are. However, you can go in and then manually choose to go to see wherever the next program is happening. Of course, ours is going to be kicking off early March. We're kind of open for applications now. This is kind of our big kickoff event to do that. I mean, we could go on and on and on. At least I know I could, and I know Pat spoke to it. And
Exactly. It's getting late.
About, how the importance of all the mentorship and the programming and how, you get what you pay for, people. It's just in Canada. It's been kind of my thing coming back. You get what you pay for. So please be aware of that when you're in Canada. That's why we charge for the program. And we have, 86% of people that we give fellowships and free scholarships to the program, they drop out. And there's a reason. There's a reason for that. So yeah, I wish everybody the best of luck, and hopefully everybody stays strong through COVID. We all come out after Christmas ready to rock and roll.
Yep. Thanks, Sunil. Do you want to say anything to close out besides Techstars?
Besides Techstars, no, really, that's really all
That's what I thought. Okay, I put a link into the chat for the FI networking session. So we're going to pop over there. I'm Patrick and Valerie. You're welcome to join, or you're welcome to continue working hard on writing those checks and creating those crowdfunding. But the rest of us are going to hop on over there if you have any other questions for Sunil and Todd and myself. But again, thank you so much. I'm inspired. I feel like I'm going to do a startup now. So I think this has been a very, very good session. So thank you very much. And we will talk to you soon. Thank you,
Casey. Good
Thanks,
job,
everybody.
buddy.
Bye, everyone.
Bye.